Welcome to Keep What You Earn, where entrepreneurs of all levels learn how to navigate the financial side of entrepreneurship so they can keep what they earn and grow their business with confidence. My name is Shannon Weinstein. I'm a CPA, coach, and business mentor, here to simplify the money side of business for you so you can build your wealth and create the life you desire. Each week, I'll bring you guest interviews and solo episodes to help you unlock growth in your business through both strategy and mindset. I hope this episode inspires you to take action, but remember that the information contained in this episode is intended for educational purposes only and is not individual tax advice. Please seek the assistance of a qualified accounting or tax professional to implement anything you may learn in today's episode. All right, let's dive in. So we're into April now, and you might be feeling like you're doing your taxes, you're getting your return back, and once again, you're disappointed because you owe or you're not getting as much back as you hoped for. If you feel like you're in an endless cycle of owing taxes year after year and you dread getting your tax return back, then this episode is 100% for you. If you wish that you could reduce the amount that you have to pay every April so that you can stop stressing out, this is definitely the episode for you. So, we're going to talk today about 3 ways that you can stop owing taxes. And we talk about owing taxes as not paying taxes. By the way, we all have to pay our taxes. But I'm going to talk about how we stop owing taxes every year. And the major theme here is about getting proactive. And I know that's like the last thing you want to hear is, oh, Shannon, don't tell me I have to actually do something to make this happen. You do, but it's not as hard as you think. So we're going to go through 3 practical ways that can reduce how much you owe at tax time every single year. Let's dive in. Number 1, set aside money from every sale. You have to trick your mind into understanding that roughly 20 to 25% of your income is not actually yours. And if you can set aside roughly 20 to 25% of your sales that come in, what will happen is you'll be setting aside that money out of sight, out of mind. And ideally, we recommend putting this in a separate bank account, and bonus points if you can put it into a separate bank account in another bank separate from where your business checking account is. Why? Because then you won't be able to see it or be tempted. So remember, the tax savings account is actually a personal account. You should be, side note, paying your taxes personally. If you run a business and you're anything but a C corporation, that includes S corporations, LLCs, partnerships, sole proprietorships, you name it, your business is actually passed through and you are paying taxes as the taxpayer as an individual. So if you are setting aside money for taxes, you're technically taking money out of the business to help you cover your tax bill personally. There's nothing wrong with that, but just keep that in mind that your tax savings account is technically a personal bank account that you're pulling into. So I say put it into a separate business bank account because I want you to separate it from the money that you'd be tempted to spend on operating expenses. Now, I say take 20 to 25% of your income because your taxes are actually based on your profits, which is after expenses. So you're probably thinking, why am I doing this based on my sales if I'm not paying taxes on all that money? Because you won't know until later in the year how much you're really going to make in profit. So what I recommend doing is setting aside roughly 20 to 25%, depending on, of course, your tax bracket, your margins in your business, and by all means, consult your tax or accounting professional on how much to set aside. They know better than I do. But what's really important is that you're setting aside something and putting it to the sidelines so that when those tax bills come due throughout the year, you're ready to go. You don't have to worry about taking a bunch out of your business and starving yourself. That's the whole point. So you want to take into account what you're going to be making for the year and setting aside that 20 to 25%. So we've got that covered. Now, if you actually set this aside and you don't actually make much of a profit for the year, let's say you think you're going to make $100,000 profit, so you set aside $20,000. And come the tax time to pay, you're like, well, I only made $10,000 in profit this year. I definitely didn't reach my goal. Well, you don't have to pay that in taxes. you can actually just take that money and move it towards another savings. You could invest it, you could pull it out personally, you could do whatever you want with it. Most folks will dump it back into their operating expense account and carry on. So you have a lot of choices in how you want to allocate that money, but the discipline of setting it aside is really the most important part. So let's jump into when to pay those taxes to make sure you're not paying a huge lump sum in April. You want to check in quarterly on how you're doing in your business. So check on your profit quarterly. And we have these installment payments that the IRS calls quarterly estimates. And you may have heard or asked this question, should I be paying taxes quarterly now that I'm a business owner? And the answer is yes and no. You're not required to pay taxes quarterly if you're a business owner, not necessarily. If you are profitable, then the IRS wants you to pay in installment payments throughout the year to mimic what it's like to have your taxes taken out of a regular paycheck, because they don't want to wait till April for their money. They really don't. They don't want you to pay in a huge lump sum in April. So let's go back to our example of $100,000 profit. And let's say you've reached that goal and you're going to owe $20,000 in taxes, roughly. I'm just making up numbers to make it easy. So $20,000 in taxes, that would suck to have to pay in April and write a $20,000 check. I'm sweating just thinking about that. I would not want that coming out of my business. However, if they told me that I had to pay $5,000 in April, June, September, and January to go towards that, I could manage paying $5,000 4 times a year as I'm earning money, because as I earn it or as I spend it on taxes, I can earn that back by the time the next payment comes due, and I'll be okay. So what you want to do is create that financial flow by setting yourself up to pay those quarterly estimates. And you might be thinking, okay, how do I know when and what to pay? We're going to go through that. So when you file your 2021 taxes, which are due in about a week, if you're listening to this episode right when it comes out, then if you owe, you're going to be getting a schedule of estimates with your 2021 tax return. If you're getting them professionally done, sometimes certain softwares don't have this, but we do provide this for our clients. You should be getting vouchers that say, hey, you're going to owe this much in estimates for Q1, 2, 3, and 4. And what you want to do is pay attention to that, because you're going to want to fulfill on those vouchers and actually show up and pay those. Those vouchers represent what you'll owe in estimates if you have a very similar year to last year, because they're based on 2021. So they're assuming you're going to have a repeat year. If you do better, you want to chip in a little bit more. If you're not doing as well, then you don't have to chip in that much. This is designed, these vouchers, to be a baseline for you. These are the minimum that you'd have to pay to avoid some type of underpayment penalty. So even if you outperform last year, even if you do better, then if you pay what's on the vouchers, you won't get hit with a penalty, but you'll have to pay the extra come tax time. So even if you just pay the bare minimum in the vouchers, you'll still be in a better position to not pay a huge lump sum come April, but you'll have to pay whatever's left over. So what you'll want to do is make sure that you're being proactive in looking at your numbers throughout the year of your profit, because if you're significantly exceeding what you did last year, then your estimates may not be enough to cover you. So you want to be aware of what you're expected to pay and what you're actually going to be looking at in terms of a tax liability. You want to make sure that you're keeping your business healthy throughout the year by making sure it has enough cash in the bank account. And if you are shelling out a ton of money in April, that's not going to be a good thing. That's going to take a very hard blow to your bank account. If you have an accountant who does your taxes, but you only see them once a year, I guarantee that you're not maximizing your tax savings. What you're actually doing is paying someone to do a report of how your money spent the year and talking about what happened in the past. Well, tax strategy is all about thinking about the future. You deserve a partner who can help you be proactive with lowering your tax bill and not just reactive. At Financial Solutions, we believe that tax services should be transformational, not transactional. That's why we offer tax strategy services that include a complete tax plan, meetings with me and our team, and year-round email and text message support to make sure you're always optimizing your taxes based on your goals. Book a consult with us using the link in the show notes and find out how you can save thousands right now. So, number three, this really ties into the quarterly estimates. If you're wondering, okay, but when should I check on this? What should I do? What's the formula to figuring this out? My third tip, talk to your tax professional in the fall. In the fall. Why? Because enough time has gone by in the year that we know enough of the story to figure out how it could end. So I always say your tax return is the story about how your money spent the year. So if you're going to want to change the ending, you're going to want to give your tax professional roughly 2/3 to 3/4 of the story in order for us to figure out how it could possibly end. If you try to do this in Q1, then we're kind of taking a shot in the dark alongside you. There's a lot that can change, a lot that you can't control that could happen over the course of 9, 10 months. So what we want to do is make sure we're meeting 2/3 or 3/4 of the way through the year and touching base on, hey, how much am I making in profit? How much might I owe in taxes? Furthermore, what should I be paying in estimates toward that tax liability so that I can minimize how much I truly owe at the actual deadline? You want to plan ahead as much as possible. And it's possible to plan. I think far too many entrepreneurs dive into their businesses and assume that the tax system is designed to really, I mean, honestly, to screw them by telling you what you owe in April and then you have to pay it. They just think it's this vicious cycle. It's not. You actually can find out what you're going to owe much, much sooner. And here's a pro tip. Let's use 2021 as our example. Your fourth estimated payment is actually due in January. Here are the deadlines for your 4 estimated payments, just so you know. April 15th, June 15th, September 15th, and January 15th. Now, if those 15ths fall on a weekend, you're looking at the next weekday that isn't a holiday. They can fluctuate a little bit, but generally it's the 15th of the month. And there is no rhythm. This isn't every 3 months. So make sure you're paying attention to your calendar. Again, April, June, September, and January. And here's the best part. January's deadline, because it's after the whole year happens. You have all the information. As soon as you close your books up, and you finish your business on 12/31, you can then spend the next 2 weeks looking at your numbers, figuring out your final profit, and then figuring out what you're going to owe. And then when you do that, the best part is you know exactly what you're going to owe, or pretty close. You know what you're going to owe, and you can actually write a check for whatever's left over and know that if you owe anything in April, it's going to be very, very, very low. It will not even bother you. That is one way that you could strategize around owing taxes. So again, if you are in this cycle of just paying a huge amount every April and being reactive to your tax bill, these are the 3 things that I would recommend that you do, and that every tax professional really dreams that entrepreneurs will do to reduce their tax burden. This not only will reduce how much you have to pay per bill, in a sense, it will not only spread out those payments throughout the year, but the more proactive you are about monitoring your profit, monitoring what you're paying in taxes, the more mindful you're going to be in your business. And therefore, the more you're going to be looking at tax strategies, how to save, how to plan ahead. Because in that tax planning meeting with your accountant in the fall, you can also look at what strategies am I not taking advantage of yet? What can I do by the end of the year to reduce this profit down close to zero? What else can I be doing that will help me reduce the tax liability, not just better plan for it and predict it? So we like to think about both things. How can we reduce that tax liability, but also how can we spread that out so that it's not such a burden on the business owner? So if you do even one of these 3 things, you'll be setting yourself up for success. Mark your calendars on those deadlines, set your goals, and take action this year. And I promise you that you'll be thankful you did next tax season. Hey, wouldn't it be cool if you could chat with me and our guests about this episode? Well, guess what? You can. Join the Keep What You Earn community now using the link below in the show notes. You can post your questions, chat with fellow business owners, and the best part, it's totally free. Oh, and by the way, it's not a Facebook group. That's right, no noisy notifications or distractions. Just what you need to get the full experience from listening to this podcast and maximizing your value. Meet us over there after the episode to get exclusive content and access to me and our guests for your questions. We'll see you over there.
Thank you so much for listening. If you enjoy this podcast, please leave a rating or review wherever you listen. If you learned something new or felt inspired, please share your biggest takeaway with me on Instagram and tag me using the handle @ShannonK Weinstein. Thank you so much for helping me spread the wealth and empower more business owners to keep what they earn. See you next time.